Hold your breath. Make a wish. Count to 3. Come with me, and you'll be in a world of merging corporations. Take a look, and you'll see all the value they're creating. Torchlight Energy and Metamaterial. Hey everybody, Walrus here from Walrus Street, bringing you a DD today on Torchlight Energy and Metamaterial. Torchlight's ticker is TRCH, and Metamaterial is MMATF. Please note, Metamaterial is a Canadian registered corporation. One of the reasons this merger is happening is because they want to be traded on the US exchanges. I wasn't actually going to do a DD video today, but Monday's a holiday in Korea. I had a little extra time, so here I am. Now, I had a lot of requests for Torchlight. Akalesh, Howard Capote, Zoe, Bill Park, Ashmiad, Callie April, Friezo, Tito M, and Sterling Farmer. All 9 of them have requested that I do a video covering Torchlight going back about a month. When I was doing my research, I found a couple of recent Reddit posts from users Mr. Delmont, Goodspeed MD, and Saint OL. So if you guys do want some more information, go ahead and check out their Reddit accounts. I looked on YouTube to see if there was any other videos covering this merger, and of course there are some, but most of them are just reading the merger article and not really giving much extra information. I did find one video that was covering it pretty extensively. He looked at both companies. The channel is Michill TV, but I'm afraid it's in Korean, so 한국어 할 줄 아세요? 아니요? 안 됐네요. Check it out if you want, but for now, let's get into it. I want to start with Torch, explain the company, and then we'll look into Meta for the actual discussion about the product, because if you invest into this, you're actually investing into Meta through Torch. This merger was announced back in September of 2020. And if we go back on the Torchlight chart, you can see Torchlight was trading at about 35 cents a share. So anybody who got in back then when this announcement was made, good on you. Since then, we've actually gone up as high as 483, and right now we're sitting at 248 a share. The actual definitive agreement was signed on December 14th, 2020. Some of the highlights of the agreement: we are very excited to sign the definitive agreement with Metamaterial. This is John Berta, Torchlight's CEO. We believe this transaction provides our shareholders with the best opportunity moving forward. Metamaterial offers proven disruptive technology with strong environmental, social, and governance priorities. This transaction provides our shareholders with access to the multi-billion-dollar markets Metamaterial serves and new applications that are being revolutionized with their sustainable technologies, while still allowing our shareholders at closing of the transaction to participate in the proceeds of our oil and gas asset divestitures. The two companies are going to be merging together, but Torchlight is going to be divesting all of its assets. What does that mean? Fire sale? Probably a bad choice of terminology for an oil and gas company, but you get the idea. They're going to be selling off everything they own: equipment, land, any reserves they have, everything. And Meta is going to be merging with them. Now, this is from the SEC Edgar page. We've got an update. This is from February 3rd, 2021. And this details the plan for the two companies merging together. Now, since the merger was announced, Torchlight has been giving some loans to Metamaterial. This is on page 3. The Meta shareholders' proportionate share of the total pro forma number of RTO acquirer shares, that's Torchlight, to be outstanding upon completion of the arrangement, which for greater certainty will be equal to 75% of the total pro forma number of outstanding blah, 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 blah. A lot of words. What this amounts to is, after the merger, Meta shareholders are going to hold 75% of the company. Torchlight is going to hold 25%. So you're going to be getting shares of Meta if you own Torchlight. Why would anybody buy Torchlight? That's because of the special dividend. Torchlight Energy currently has projects in the Midland Basin in Texas, 12,000 gross acres, in the Oro Grande Basin. This is their main one with 134,000 net acres, and in the Delaware Basin with 1,100 gross acres. So the total acreage of the land that the company owns is about 147,000 acres. This is oil acreage in one of the most lucrative oil spots in the world, the Permian Basin in Texas. Depending on how you value the land and depending on how much they can sell it for, this dividend that they're going to be paying out once they sell all of their assets, once they divest all of their assets, is going going to be massive. There are some people online who've done some approximate dividend calculations. I'm not going to go into that. Like I said before, if you want to check them out, check out the Redditors I mentioned, but the approximate values are anywhere between about $1 per share dividend up to about $25 per share for the special dividend. Now, obviously, I'm a pessimist, so I'm going to go to the lower end of that, but I think the dividend could very well be a couple bucks a share. And right now, with Torchlight sitting at $2.48 a share, you're probably going to be able to at least double your money on the dividend alone. Plus, you'll be getting the Meta shares on top of that. This seems like a pretty good value proposition already. For this merger to go through, Torchlight had to be completely debt-free. Torchlight announces closing of underwritten public offering of common stock for gross proceeds of $27.6 million. They ended up offering another 23 million shares of their stock at a price of $1.20 per share, and the purpose of this was to pay off the rest of their debts. It worked. Now, this is from February 16th. This is on their website. On this date, they announced their only remaining secured note holder has converted all 1.5 million of its remaining position into common stock at the conversion price of $1.50 per share for a total of 1 million shares. This leaves Torchlight with no term debt remaining on its books. The company's debt-free. They have diluted their shares, but they're still sitting under 100 million shares outstanding. Now, this is the day after they paid off the rest of their debt, and this shows you how clueless Motley Fool writers are. Why Torchlight Energy fell 18% at the open today. They're saying here that shares fell 18% off the heels of a massive gain the day before of 50% because they paid off their debt. The share price is just a roller coaster. The energy sector is more volatile and the prices are more variable than most. People should focus on the fundamentals than on the share price right now. This is a February 17th article after the merger's already been in talks for months, and the author doesn't mention anything about the fact that there's a merger going on, standard price movement of an energy stock. This is on fintel.io for Torchlight. There has been a significant amount of insider buying. They only have 2 employees. It's the CEO and the chairman. If we go to their profile, we could see their chairman director, Gregory McCabe, and then their president slash CEO slash secretary slash director, John Berta. John Berta owns 2.3 million shares of Torchlight. Gregory McCabe owns 3.9 million shares. And Gregory McCabe has a holding company, Petroleum Corp McCabe, with another 5 million shares. Gregory McCabe also bought another 1.6 million shares on December 18th, which happened to be 4 days after the definitive agreement was signed. So right here, we've got insider confidence that this deal is going to be very lucrative, where the only 2 employees have a lot of shares or are buying more to benefit from this merger. Shares outstanding right now, 98 million. Shares float, 82 million, and it is shorted at 11%. Now, the short volume is not super high, but that's actually going to drive the price up because you can't short a company that no longer exists. Those shorts are going to have to close out here very, very soon before this merger officially happens. Otherwise, they're going to get burned pretty hard. Torchlight has been loaning Metamaterial $10 million. The reason for this is to allow Metamaterial to execute on their business plan in advance of their shareholder votes. This kind of seems like a little bit of a bribe to bribe the shareholders, like, hey, this is going to be lucrative for you. Vote yes. It's kind of working. This is the Metamaterial CEO, his Twitter, George Palikaras. He announced an update back on February 9th. They already have 48% votes for. The actual final vote is going to be on March 12th. Assuming that vote goes well on March 12th, this is going to happen. This merger is going to happen. Now, small red flag, if by some miracle the vote doesn't go through, then the whole merger is going to fall apart and everybody's just going to lose a bunch of money. But I think this is too beneficial for shareholders of both companies to ignore, so it is going to go through. That's really all we need to know about Torchlight. Now, we can argue, we could speculate over how much the special dividend divestiture is going to be when they sell off all their assets, but we don't actually know. All we know is that it needs to be done. The sales need to be completed by the end of June, and Torchlight has until the end of 2021, December 31st, 2021, to pay the special dividend to all of the Torchlight holders. People are guessing somewhere between about $1 and $25. I think it's going to be on the lower end of that for the sole reason that you're not going to get full price for the land on a rushed sale. All of the people that are looking to buy the land are going going to know that Torchlight is selling it and they're on a deadline of June 31st, the buyers can use this as leverage in the sale and they're not going to pay peak cost for the land. To be clear, I'm not saying it's going to come at a discount, but it's not going to be the highest price possible. Let's go ahead and take a look at Metamaterial. What is it? We're a leader in the metamaterials design. Metamaterials are engineered materials. They're in the R&D phase, 60 million in investment since 2011. They have 3 core technologies: holography, lithography, and wireless sensing. They've been granted 54 patents, have 35 more pending. They have offices in Nova Scotia, California, and London. They're opening a new production facility in 2021. They've co-developed laser glare protection product with Airbus. You're going to see they actually have a lot of really big corporate partners already. A lot of their corporate partners invest into their business for development. That's a big sign of confidence in the company. They have partnerships with Lockheed Martin, Airbus, PPG, Pittsburgh Plate Glass. Cool building. Covestro, Crossover Solutions, and Samsung. Proprietary manufacturing designs to outperform competition. Their manufacturing process is faster and more efficient than a lot of the competition. And they're recognized as a global clean tech company. And this is a big buzzword going ahead. They are generating revenue. It's increasing year on year, but the revenue is not even close enough to offset their net losses. This is pretty typical for a company that's still in the R&D phase, but it is amazing that they have revenue at all. What is a metamaterial? A metamaterial comes from the Greek word meta, meaning beyond, and the Latin word materia, meaning matter, is any material engineered to have a property that is not found in naturally occurring materials. They're made from assemblies of multiple elements fashioned from composite materials such as metals and plastics. The materials are usually arranged in repeating patterns at scales that are smaller than the wavelengths of the phenomena they influence. You're going to see a lot today that many of the metamaterials that Metamaterial is focused on, metamaterial, oh, say that too many times fast, are focused on optical manipulation, manipulating light wavelengths. Metamaterial research is interdisciplinary and involves fields such as electrical engineering, electromagnetics, optics, solid-state physics, microwave and antenna engineering, optoelectronics, material science, nanoscience, and semiconductor engineering. That's a lot of fields. That's a lot of potential for sales in the future. I thought this was an interesting explanation of metamaterial in case you still don't get it, because it's complicated. So the concept of meta comes from our ability to engineer artificial materials consisting of a composite of nanoscale structures which can respond to light in entirely new ways. It's kind of neat to see an example in the case of a metal like gold. We usually think of gold as a bulk material that's reflective, yellowish, and shiny. Even when you go down to the nanoscale, gold is still gold. But by specifying the geometry of nanoscale gold, we can change the color of gold from yellow to green or red, and it can support many other types of optical properties that we don't associate with bulk gold. Those are properties material engineers can use to make new devices. Metamaterials are artificially engineered materials that have the same properties as naturally occurring materials, but they're typically much lighter and much more adaptive and much less expensive. This is the investor relations page of their website. You can see their products could be used in a growing number of applications, blocking harmful light such as green lasers or UV radiation, gathering and redirecting light to improve solar panel performance, improving performance of optical displays, replacing transparent conductive materials on touch screens, LCDs or OLED displays, defogging or de-icing, and the acquisition or enhancement of signals for non-invasive medical imaging such as MRI, or for sensing applications such as glucose monitoring. Ruh-roh, Sensonics. This is another potential glucose monitoring that's not invasive. What's important? Let's talk about the money here. Let's talk about the TAM and the SAM. I don't like these figures they put on here because they're kind of just enticing dumb investors here with the possibility. They're saying 3 trillion by 2020 in the electronics, displays, and IoT devices. All of the growth rates are above 20%, but when they're throwing out these numbers like 3 trillion, oh, okay, I really want to see the source of this. Internet of Things forecasts and market estimates. Let's click on that. Article not found. It's a dead link. One of the Reddit users that I mentioned earlier, I'm not going to say which, but they just copied and pasted this list into their DD, including this dead link here. Always be wary of what you see online and just kind of double check your DD that you're reading, please. They're claiming 3 trillion here, but we don't actually know where they're getting the amount from. Whatever. That's not really the big picture here. What's important to me is this 4.1 billion here by 2023 in the metamaterials market. It's an emerging market with a 43% annual growth rate. Now, I wanted to double check that number because that 43 sounds really high. This is Grandview Research. We've used them a few times so far. We could see the industry is expected to grow at a growth growth rate of 18% from 2017 to 2025. Another statistics firm, Emergent Research, says it's going to be 23.6% annual growth rate, but it's only going to hit 3.6 billion by 2027. I'm not as optimistic for the short-term viability of this. I'm not saying it's a bad company, but I'm saying I think they're overestimating their numbers on the website, and other independent researchers are coming up with numbers that are a little bit less than the 43% CAGR they're reporting and the $4.6 billion cap. Now, take that for what you will. It's pretty common in investor relations presentations to find the highest possible statistic and put that in to increase the number of investors that are interested in your product. So it's par for the course. It's not like Metamaterials is being inherently deceptive. They're just following industry best practices. Now let's take a look at my 4 questions before investing in a company. Who's in charge? What's the product? What are the financials? Who else is involved? Let's start with who's in charge. George Pelikaris, PhD. You'll actually see several PhDs here. He's the president, CEO, and founder. I love it when a founder is still involved in a company. They're the ones that are usually most passionate about it. He has 12 years of leadership positions of high-tech startups, awards, great schooling, 50 plus patents, 3 industry awards. Here's Jonathan Waldron, PhD. He's their CTO, another 140 patents. Thimos Kalos, another PhD, 40 filed patents, 50 publications, applied physics. I mean, these guys are just ridiculously smart. Down here, Gardner Wade, the chief product officer. He's the one that I feel like is probably going to be most likely to be in charge of their marketing. His experience is in development of engineering of high definition optical eyewear for global brands in military, flight, and performance sports applications. He's mastering light, delivering tomorrow's tech today. I like this. If you come down here, he was the founder CEO of CHOPO Surf International, but before that, he was the director of development and engineering at Oakley. I love Oakley. I have 2 pairs of their sunglasses, and he was there for 19 years. Now, the company's timeline, this isn't really their personnel, but I do want to just kind of go over this because it touches on how old some of their partnerships are. We have a major OEM deal in 2014 with Airbus, partnered with Lockheed Martin in 2017, Boeing in 2017, and Convestro in 2019, partnered with Samsung and Babcock. This is their investor presentation, Mastering Light, Driving Innovation. You can see an image of their production process here. The Financial Times listed the breakthroughs in metamaterials in 50 ideas to change the world. Also, they have a growing patent portfolio with a goal in 2021 of having over 150 patents. I mentioned this before about how patents create a bit of an economic moat with intangible assets that other companies have a hard time crossing. Advantages over competition, high quality proprietary large area patterning, lower production costs, roll-to-roll capable, higher performance, precise control, manufacturing in minutes versus hours. They have their manufacturing down, and that's a proprietary advantage of Metamaterial. The competitive landscape, these are the other Metamaterials companies. We got MetaWave, MetaBoards, Echodyne, Chi-Meta, AMG, and Sonobex. The reason that I highlight that is if you look those companies up, none of them are publicly traded. None of them. Metamaterial is going to have the first mover advantage on the stock market of being the first publicly traded metamaterial company. First movers, though they don't always succeed, they have a huge leg up on everybody else. Anytime something happens with metamaterials in the news, metamaterial is going to get increased investment dollars. They have partnerships with Convestro, Samsung, with Lockheed Martin, with PPG, with AGC. You can go through this presentation on your own. It's 41 slides, but they talk about their products, transparent sensors and 5G antennas. We've got broad and growing target applications in consumer electronics, automotive, energy, aerospace, defense, health and wellness, tons of industries, a lot of variability. Here they're showing the transparent window film transforms outdoor 5G coverage, enhances indoor 5G and digital TV reception, protects sensors transparent to radar and LiDAR simultaneously, protects the sensors against the cold. These are their OEM partners and customers already. These are global. A lot of these are American companies, PPG, Thermo Fisher, but Samsung's Korean, Airbus is European, Sekisui is Japanese, Babcock is from the UK, Innovate UK, Canadian. This is an international company already. Their investment priorities, they're still spending money on R&D, and they're working on scaling their revenue and their business model. They actually have received historical funding from their business partners, Lockheed Martin, Airbus, Airbus Babcock. The reason this is important is because these aren't just customers, these are investors into the company that want to pay Metamaterial to develop something for them, something special, something unique, to fill a need. This is a big vote of confidence that they're getting paid to develop something by these customers. NASDAQ's first ever metamaterials company, first mover advantage, access to non-dilutive government funding, provides significant match of equity and or debt financing. The government funding has something to do with the green designation of the company in Canada. Regarding their patents, they have 89 filed patents, 54 granted, 5 registered trademarks, proprietary custom manufacturing processes and trade secrets. Processes and methods were patented early, providing multi-year advantage over the competition. This further expands that patent moat. Here's some of the augmented reality eyewear, the AR glasses, their application roadmap, near term 18 months. They have revenue potential, 50 million a year for augmented reality, 20 million a year for optical filters. They do have revenue in the near term. This revenue is just potential. In the midterm, this is where we start getting into the billions of market potential, 2 to 5 years. 2 to 7 years, we've got some of the medical products, MRI imaging, breast cancer screening, non-invasive glucometer, biosensors. The potential's in the billions. Solar, automotive. Now, they're also making acquisitions. They acquired assets and IP of Swiss lens manufacturer Interglass. This was on February 2nd. They acquired more than 70 patents from Interglass. These patents are in the field of casting processes for high-quality plastic lenses or other optical components based on UV curing acrylics. The Interglass process is sustainable, which will help support Meta's sustainability initiatives, and this acquisition is going to lead to the AR one-stop shop. This is on their November 30th letter to their shareholders. They're still stressing that they're in the R&D phase. They're gaining revenue, but we're targeting continued growth in a number of corporate development programs as a precursor to future product sales. So they are accepting revenue on some of their developments so far, but they're still focused on future sales and R&D with their spending. That wraps up question number 2, what's the product, and brings us to question number 3, what are the financials? This is their third quarter earning results. Kind of unremarkable. You can see the year-on-year revenue growth of 216 to 263,000, but you can also see the net loss for the period year-on-year going up by an additional 600,000. So even the increase in the net loss is greater than the revenue intake. We can see they're trading at about 266 right now. Pretty low volume. We can see they have a float of about 42.7 million shares. On their earnings report, we could see they actually have about 83,597,000 shares outstanding. 35% of the shares are held by insiders and 16% are held by institutions, which brings us to question number 4, who else is involved? If we take a look on Yahoo at the holders, nothing. 16% of the shares are held by institutions, 25% of the float is held by institutions, and there's only 2 institutions holding shares, but Yahoo doesn't know which ones they are, and if I go to Fintel, they also don't know which ones they are. I couldn't actually find that information. Sorry, guys. Where does that leave me? I want to do a little SWOT analysis of the merger here. Strength, weakness, opportunities, threats. Strengths. If you buy into Torch, you're going to be getting that special dividend sometime by the end of 2021. Meta is going to have the first mover advantage as soon as it gets listed as the only publicly traded metamaterials company on US exchanges. The patents are creating an economic moat as intangible assets for both the engineering process and the technology that's been developed itself. The OEM clients and customers are willing to help fund Metamaterial to help them develop more technology. Weaknesses. Torch could be forced to sell its assets below their true value because the divestiture has to be completed by the end of June. And if you look at Metamaterial, even though it's generating revenue, it's still bleeding money and it's not a profitable company because it's still in the R&D phase. On top of that, Metamaterial is very partnership dependent for both funding and revenue. Opportunities. Torch holders are basically getting paid to have first exposure to Metamaterial on the market. If you're holding Torch at the time of the merger, you're going to be getting shares of Meta just for holding Torch. Another opportunity is that Metamaterial is going to have the highest exposure, the highest visibility in the industry for a long time as the first mover. We talked about the digital ad space last week and how everything kind of compares to the trade desk. We don't compare all of the other digital ad companies to Viant or Magnite or Kubient. We compare them all to Trade Desk as the most established player, the first mover in the area. Threats, there is a possibility, it's a small one, but there's a possibility the merger doesn't go through and they don't get the votes they need. I don't think that's likely, but you have to consider that as a threat. We have to be realistic here. There's the possibility of a very low dividend payment from the divestiture of the Torchlight assets. There's also the threat of slowed customer growth, depending on how long the economic downturn lasts, seeing as Metamaterial is a global company, maybe companies aren't willing to pay as much into R&D at this time and new product development. There's also the threat of just normal R&D issues. Maybe something they spend millions of dollars into making just doesn't work out. Even though they're opening up their new manufacturing plant, there's also a small threat of bottlenecked manufacturing where maybe they go to the point where they have more customer requests than they can handle the manufacturing for. Oh, what a first world problem. But then those customers end up going to other metamaterials manufacturers for their product manufacturing needs. What's my plan here? I'm going to see if I could get enough money together in the short term here to get 500 to 1,000 shares of Torchlight. I'm going to be holding them through the merger and through the end of the year for the special dividend before getting rid of them. That should give me about 25% the shares of Meta, which I'm happy about. I'll hold Meta long term because I think this is a very intriguing company, and having the first mover advantage, it has a very promising future. But this is going to be another one of those companies that you kind of just set it and forget it. In the short term, I expect hype to drive this price up. Also, we have other factors that are going to drive this up, such as insider buying, institutions investing in as soon as the merger's completed, and the shorts having to cover their positions, driving the price up even further. All in all, I think this is a risky play, but it's a pretty good opportunity to be one of the first people investing into this technology, into these materials on the US exchanges. Definitely excited for this. Definitely thankful to everybody who suggested this to me and who brought it to my attention. So that's it for the video today. As always, I want to thank you guys for your support. If you enjoyed the video, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. If you're new to investing and you want to support the channel, please check out my Webull partner referral link below the video. If you use that referral link, sign up for Webull, fund your account with $100, you get some free stock, I get some free stock, everybody wins. All right, everybody, that's it for me. Hope you have a wonderful week. Adios.